Hey guys, it's Simon with ToughTrader.com, Trade and Perform Coaching. Wanted to do a trade review for ES today. The whole goal for us day by day, or the essence of the room, is to improve as a trader day over day. And how do you do that is the question. Well, it's a constant reinforcement of the fundamentals plus the nuance of the details that are taking place through the course of the day. And it's my job as the guide for the room, as the teacher in the room, to help guide the traders through the day so they can make the best decisions for their trading accounts. So before we get started, let's kind of jump in. I hate the legal disclaimer, but it's required, so I'm going to put it on there. Past performance is not indicative of future results, right? Trading futures is risky. You can lose a lot of money, actually all your capital trading futures. So please make sure you know what you're doing and that you have a risk trade plan. I'm sharing my trade plan with you in hopes that it'll make you a better trader, but please have an understanding of what the risks are and what you're trying to accomplish with your trading. There's multiple strategies. My way certainly isn't the only way, but I consider it very good for those people who are looking for an edge in intraday trading. I only trade the US session. I don't trade, for the most part, I don't trade Asia. I don't trade Europe. I trade during the day. And it's a little bit of a different world than in the European and Asian sessions. And you really kind of have to have your wits about you and understand what it is you're trying to accomplish through the course of the day. So what am I trying to accomplish? I'm looking for trades that will give me anywhere from 5 to 20 points of P&L and NQ, and anywhere from 2 to 10 points in ES. That's my primary goal through the day. I want to achieve 1 to 3 trades every day. Sometimes I get more. My goal is to find 1 to 3 high odds trades from high odds locations. So the natural question to that is, well, how do you find the high odds locations? And so there's a formula to that, and I'm going to show you what that formula is. So every night I post a level of charts, right? Those charts can be pretty crowded. We have the NYSE tick below, which we use to kind of help our gauge. But how important is that? Not a whole lot of important. It's okay. It's not massively important. We can get rid of it, right? And then we can get down to our core. So when you look, I then have Globex high, value area low, prior day's high. Those are all important locations to find trades. But when you get down to the core and the essence of what the zones are, the zones look like this. When you strip everything away, that was today's chart. We had a yellow zone. Yellow zones are the second highest odds. White zones are the highest odds locations. And what am I trying to achieve from those locations? I'm trying to achieve a pause in the market, a counter rotation, and an opportunity to enter that trade and garner, just from the zones alone with no other information, anywhere from a 2 to 4 point trade out of those zones. Generally speaking, the stop is about that I suggest is about 2 points behind. But again, that depends on what your risk profile is, right? And the further the stretch, when we get to those key areas, the higher the opportunity to make a large rotation back to the upside. Best way to describe that, right? So when you strip everything away, this is what the zones look like. And what you'll see here is that we were able, I'm going to put little arrows underneath, right? You get a counter rotation at the yellow zone. You get a pause 5, 10, 15, 20 minutes before the market continued on its way to the downside, right? So did the zone do its job? You bet. It paused there and allowed the traders to think about it. It gave you an opportunity to attempt to get a trade to the upside. Didn't happen. Next, into the 27.77 and a quarter zone. Did that give you a rotation? Absolutely. It came into 27.77 and a quarter, and we rotated all the way back up to 27.87. That was worth a potential 10 points out of that zone. And then finally, at the end of the day, we hit 27.76. And you can see initially we were able to trade from 76 to 70 right out of it. That was right at the bottom of the hour. And then you can see they tried to break behind, unsuccessful, and it eventually yielded a rotation from 27.66 all the way up to 27.72. So the zones did their jobs by themselves, right? There was no question that if you just took the first touch of the zones, what it probably looked like was profit, either flat or a loss, depending on how you managed it. Hard to imagine how you lost money here, and hard to imagine how you lost money here, quite frankly. Any well-managed trade saw a profit on 3 of the 4 zones, and hopefully you realized after 20 minutes something was really wrong there, and you bailed on the trade. But if not, you took a loss behind the back of the zone, and that's okay. There's nothing wrong with that. You know, you're going to lose money from time to time. So the question is, psychologically, what does that give you? So the zones are important because what they're derived from let me see if I can show this real quick. What they are derived from is the volume profile and the TPO profile. If you haven't read Mind Over Markets, I highly, highly, highly recommend it. It gives you a great basis. So there's no hype, there's no music, there's no, oh my God, I made $10,000 before 6:30 in the morning in my pajamas, sitting here in my underwear. None of that crap, right? So trading isn't easy. If you're looking for an easy way to make money, go to Vegas would be my recommendation on that. I can't state that any more clearly. It's not easy. This thing constantly changes. You've got a lot on the line. No one's like, woohoo, I got a drink, but I lost money at the tables. No one does that in trading. Everyone wants to make money when they trade, and you're competing against the best minds in the world who are there to take your money. That's what the machine is designed for, is to give those with an edge and transfer capital from those without an edge to those with an edge. So let's start from the basics. On top of the zones, we had some basic information that we needed to see today, and you can look at the market preview there on my channel if you haven't subscribed to it. Would appreciate it. But if you'll look, we had some very basic premises. The first premise, you had to get below excuse me, not 1607, same premise, but let's go to a ES chart. I know I have an ES chart up here. Here we go. And there's my NQ chart. Here we go. Let's start with NQ and then we'll roll to ES. So basic premise. These are value areas, right, from Dalton's profiles, right? And we had a very simple concept. In order to be short and really be short, you had to get under 71, 50, 75. I laid this out in the market preview very clearly. I said that was the only way to get an extension down. You had to get through it. That's nothing. There's no miracle about that. Read there. It simply was a fact, right? You really didn't want to. You weren't thinking too short once you got underneath here. Number two, there was two roadblocks in the way. I pointed out the TPO point of control and the volume point of control. So for those who are newer, right, those are the easiest way to define TPO and volume point of control. That is the place where the most volume went off and the most time was spent during the day. And you would expect it, as a rule of thumb, to get defended. Okay, so we gapped up. We gapped up out of range. We were above prior day's high, and we've been unable, much less to test prior day's high, much less test prior day's low, right? That's just been, as you can see, for 4 days in a row, we've really been pushing really very hard, right? And this gets tricky now, right? Because what are you thinking? Almost every day that we gap up and we run. So nobody wants to be, who wants to be short if we're going to drive straight up? Not only that, but your bias, if you're not disciplined, is, or your natural instinct would be to buy that gap thinking, oh, we're going to trend day up. And I promise you, a lot of people got smoked buying the gap today. Because, and why? And it's easy to understand why someone would, because if you look, if you bought the gap up here, you ended up okay. If you bought the gap up here, you ended up okay. If you bought the gap up even here, you ended up okay. But this is a great example of how it only takes 1 day of a large downside rotation. This is over, if my calculation's right, this is over 150 point NQ rotation down. That is, let's see, that would be almost $3,000 a contract of oops if you got this wrong. And that's when I go back to what the market likes to do is change its routine on a regular basis to make it as hard as possible for day traders to pull money out and make it as easy as possible for those in the know to pull money out of the market. Because what do we know that we can count on? We know that we can count on the way that the market presents itself will change. And what does everybody in the world want? Everybody in the world wants the markets to stay the same. Give me the same thing over and over and over again so I can keep making money, which is what everyone loved about the market from January, actually I guess late last year, let's even go to October, November, all the way through to the beginning of February. Everyone was like, this is fantastic. I can buy the market in the first hour of the day, hold on, and it'll close higher. Well, that's gone. It's out the window, right? So you've got to now be a better trader to pull money out. Okay, so our first clue that we had a problem, below 71.75. Our big warning was below 71.50. And pretty much any support level you'd find in here just got blown up today, right? And then we can take a quick look at ES. It was very similar in the way that it presented itself today. Again, I want to slow down here because this is important. If we can't get below 27.93.75, there really is no downside rotation. You would expect the top of that to find an attempted responsive buyer. The market was in trouble if it got below 27.8550, and then you had your volume point of control and your TPO point of control, you would normally expect those to provide responsive buyers in those areas. That failed. Okay, so that's your volume profile and your TPO profile, bit of information that you can carry over to the chart for the day, right? So then we do the next piece. I'm going to do this all on ES, I think, because it'll be easier that way for everyone. So when we look at ES, just from a basic trading standpoint, here's the zones. Hopefully everyone can see that. Actually, I can just do it right here since I don't have to have that on the other computer. And we look at the zones, right? We're going to go to ES. And we're going to go through our checklist, right? We do this every day in the room. Same thing over and over. It's one of our edges, right? So first of all, the blue line's Globex high. We opened up underneath Globex high. First bar is a down bar. So that's not a problem, but you generally want to see 3 green up bars and an open drive higher. That's usually what you're looking for. You don't get it. Next, you get above your fresh 5-minute high. That's great. Now, you got to go through your rules for trend day up. On trend day up, we will tend not to close below that first 5-minute bar that's low. So that puts this, everything is fine all the way till this bar right here. You've now closed below your first 5-minute bar, and everyone who bought above is now, this is what you'd refer to as trap traders. Everyone that would include people who are looking for open drive higher, people that were looking for continuation to the upside. And you can see that we sat there for an entire hour. And normally what I would say in the room, right, I'd say, hey, it's been an hour. Failure to test the prior day's high, right, which if you can look, was at the close, I want to say. Maybe, I take it back, 28.02 and a quarter. So let's stand corrected. It wasn't a gap out of range, right? We attempted above Monday's high. Let's reset the stage a little bit. Attempted above Monday's high, trap back in, second trap back above Monday's high. Now, normally you would expect that this would push out, right? The second trap above is very important. It fails and closes back in. We then close below the first 5-minute low. We're below Friday's high. Understand NQ looks relatively strong at this point. And now we start the roll to the downside. You see we're never able to get back above this. What this bar would be referred to as the scene of the crime, or SOC, right? And then the obvious target, now that we've gotten underneath Friday's high, failed to break out, is the gap fill. In between there was a support level, and that was this yellow zone right here. It was also value area high. You can see we tested right in. That provides rotation from 27.95 up to about, what is this, 27.9875. Huge trade? No, but we're 2 or 3 points. And if you have no other knowledge base to work off of, you know that that's a key location. First touch in should give you 2 to 4 points, and that's the very core basis of my trading philosophy. It gets more complicated, but that's the simplest version of it, right? Remember, we're still going to shoot for this gap fill. You would think that that gap fill or the settle price would provide counter rotation. And think about it when you get here, what you normally would expect if you watch the market in a strong market. You get to that settle price, and normally you would expect like a boomerang for it to hit that and shoot right out, right? Well, now look at what the price actually gave you. 5, 10, 15, 20 minutes of no boomerang action, right? Market, look where it hit this one. 5, 10 minutes out, kind of go, maybe I need to just flatten the trade up and move on to the next trade, right? There's no zone over here. This is simply Monday's low. They're trading off of Monday's low. But at this point, you've got to worry because we've traded all the way through to value area low. And if you're a student of the market, you'll see that's a very rare occasion for it to sweep all the way through, right? So the next target is the white zone down here, 27.77 and a quarter. We push right into 27.77 and a quarter. It gives an immediate 3-point rotation back to the upside, and then grinds. The room was long out of this area, and grinds all the way up to 27.8850, which was roughly the 50 retrace. I actually had a exit at 88.50, and I missed it by 2 ticks because 27.88 was the high, and I had to alternate. I think I took it out at 27.86 from the long here. I think I got 3 points in my original scale, and then was able to push up to 86. Very nice long trade, right? Now we come back. Notice we can't make it up to the prior resistance point. Come back to the white zone. They try to take it back up here. Now, if you're only looking for the highest odds, you're taking the first touch out of this zone, so the second touch is a no-go. Again, for those looking for the highest odds, we've now failed behind the natural target is the third zone down, 27.66. Again, what is that based off of? The volume profile and the TPO profile. I didn't see anything magical. I just know how to read those profiles really well, and I have a pretty good educated guess as to where we're going to find responsive buyers. We come out of 27.66 on the first touch, back to 27.70. That's approximately a 4-point rotation up, $200 per contract, first touch, right? And then if you're a more sophisticated trader and you want to try and work the reversal out of here, be my guest. That's great. The main goal is to simplify the trading decisions, or where you're going to have your key decisions. And that's to focus, once again, if you strip everything away, down to the core zones. Everything else that's on that chart is supplemental, would be the best way to describe it. Supplemental information that may provide additional trade locations for a trader, right? But they are not, I want to be really, really clear. They are not automatic. There's nothing magical about them. What I'm bringing is 20 years of experience to the market, right? And I can pretty much tell the night before, once we get to X location, that we should or should not get a response out of that area, right? And then in the room, I'm going into much more deeper, greater detail. I have an algorithm that kind of gives me an idea of where sell pressure is coming in and off, and I can use that to generate trades through the course of the day. So finally, last piece. Let's go take a look at the broader market and what's going on here and what to expect for tomorrow. So the first thing I would say for members in the room is do not be shocked by a V-shaped move, meaning we get a mirror image all the way back up tomorrow. I've seen it many, many times. I'm on guard for that. Number two issue, if you look at the larger profile going into tomorrow, and we'll do that here real quick. We'll do that for ES. See if I can share this really fast. There we go. If you look at the profile for tomorrow, so number one, this area right here, this is our value area. I'm going to highlight this because this is a neighborhood for help. In order to be long, we must get above and hold above 27.89 1/4. That doesn't mean there's not going to be long trades, but in order to get a big push up, you're going to have to get above that 89 1/4. Your logical target to the upside is this 46 to 29 if we do so. Pretty good stretch. On the downside, right, this is 27.53 has already been tested. The most logical area to look for support is between 27.33 and 27.2150. In order to achieve that, we must be trading below 27.6675. If we open up in the middle between 89 to 66, I would expect wide rotations, right? So to know what kind of price action you're going to get gets determined by whether we open above the value area, below the value area, or inside the value area. Open inside the value area, I would expect choppy conditions, wide rotations, quick up and down through here. And then I would expect more either failure and push back in here, right? But if you can sustain above, I would expect more sustained direct pushes up. And then same thing here. If we consolidate underneath here, I would expect sustained pushes lower down into that 33.21 level. And that is my 2 cents. That is my 2 cents about how the market should trade tomorrow. I would look for responsive sellers back in from this location, responsive buyers back up from this location, and scalps inside of here. And then if we got underneath 66.75, I would look for my algo to set me up and or zones for pushes lower. And if I got above 89 1/4, I would look for my algo to set me up for long rotations and swings up. And I'm going just to be simply scalping inside of here because I do not want to commit one way or another inside of this range. Even though it's wide, I know that it's likely to be choppy and whip both ways within this range. So that's the review for today and the preview for tomorrow. I hope everyone had a great day. 2 suggestions. If you're losing money, go back to paper trading. If you can't paper trade profitably, you can't money trade profitably. Secondly, even if you can paper trade profitably, it does not mean you can money trade profitably. And you want to take careful notes between the difference in your decision making between the two, because that is where the difference lies, and the success or the unsuccessful moves in between is when people move from paper trading. They're like, oh, I made so much money paper trading. then all of your little demons will hit when you switch to real money trading. Anyways, I hope that you found this helpful. If it was helpful, please hit the like button. If you'd like to join us in the room, right underneath the description, I put the email to the room. It's tradertough@gmail.com. And please email me for a 5-day pass to the room. The room's $95 a month for NQ, ES, and Russell charts, along with live commentary through the course of the day and group coaching sessions. And currently booked on the one-on-one sessions. But if you need a one-on-one coach, contact me. If I can't get free or I don't have time, happy to recommend you to several good coaching / traders that I know that are good teachers as well. So anyways, I'm Simon. Hope everyone had a great day. Have a good night. I'm going to rest up. I'm looking forward to some fun tomorrow. Talk to you later, guys. Good night.